Once a month, Cathie Wood releases her market update report, which covers everything from monetary policy, fiscal policy, as well as what's going on in the different markets. And as always, I like to pull out the key insights and takeaways on basically anything that could impact the prices of crypto or stocks. And last week was a crazy week. We had Facebook dropping a huge 26%, wiping off $230 billion in just one day. And this was caused by the fear Facebook has now peaked in users. And now inflation is running at the highest level it's been for over 40 years. And stocks and crypto have been pulling back after a record run in 2021. So the key takeaways that we'll be looking at this month, these interest rate hikes. This is one of the big topics going on right now. Then the crypto update for February. And then we're going to finish with a little bit of insider info, as Cathie Wood sought the advice of some of her value investor friends on how these interest rate hikes are going to affect the prices of crypto and stocks. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, with interest rates soaring to near 40-year highs, the main tool the Fed has in their toolkit is to raise interest rates. And everybody's speculating on how many times they'll raise it and by how much. Ready? Let's do this.
I know that this fear that inflation at 7%, which is the CPI right now, on a year-over-year basis, is getting embedded into the system because wages are rising and so forth. So what we're seeing on the monetary and fiscal front right now is effectively significant tightening already. On the monetary front, we've seen money growth go from 27% at its peak during the coronavirus, the depths of the coronavirus, to 13% recently. But if you look at it a little more closely and in a shorter term time horizon, we're down to 8% growth on a 3-month basis, 6.5% on a 2-month basis. And we believe that money growth will continue to slow quite significantly, especially if the Fed does raise interest rates. Now, we wouldn't be surprised to see the interest rates go up in March. Many people, after today's employment report, are beginning to think that 50 basis points is the number, that the Fed will basically telegraph that it means business and that it's going to head inflation off at the pass. They may do that. And if they do, however, we think the stars are aligning in such a way that they will get the message very quickly that they don't need to do much more. So they might want to do the 50 basis points just to say, okay, we're done for a while. Now, what's interesting about the market's reaction to this possibility is that strategists out in our world are now trying to leapfrog each other, saying, okay, I think it's at least 3 more tightenings after that, or 4. I've even heard altogether 7. So the reaction you've seen in the equity market recently is fear, I think, that the Fed is going to go too far, too fast.
So this is one of the big things going on right now, which is impacting the prices of crypto and stocks, these interest rate hikes. And basically, we're coming off an exuberant year in 2021, where there was amazing gains in the S&P and crypto, but now inflation is getting out of control. And to combat this, the Fed needs to raise interest rates and pull back on the easy money creation. And this has led to some fear selling, with risk-based assets seeing the biggest drops. And so the questions everyone are now speculating on are, how many rate hikes are they going to do and by how much? And then even more importantly, how is this going to impact the prices of crypto and stocks? And remember, the drops we've had so far are people just panicking about the threat of rate hikes. We've not even had any yet. Now, Cathie Wood did share some insider information on how the rate hikes will affect crypto and stocks, which we'll cover in a sec. But next up is Cathie's crypto update for February.
On the innovation front and on market indicators, cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets. More and more hedge funds are involved in them. So when the market corrects, we do see higher correlations these days. Although over a full market cycle, the correlation between crypto assets and any other asset is extremely low, which means for diversification purposes, crypto is a very interesting asset. In our Big Ideas 2022, you will see how we break out crypto. Our understanding is evolving, and we are able to describe it in three ways: a money revolution, a financial revolution, and a next generation internet or metaverse revolution. So if that piques your interest, do take a look at our Big Ideas 2022. I'm very proud of our research. Our research is unlike anything else you'll see out there. You will see ours because we give it away. Again, unlike most other firms, meaning we give it all away.
So just mentioning that crypto is going through a big correction and that they recently gave away extensive crypto research, which I did do dedicated videos on last week. And for those who missed them, the 1-minute version of their deep crypto analysis was this. They expect the crypto market to get to $50 trillion over the next 10 years, growing at a compounded rate of 43%. They see Bitcoin having a potential to get to $30 trillion, giving the price per Bitcoin to over $1 million per coin, and Ethereum having a potential market cap of $20 trillion, which would be a 75x from today. So clearly still very bullish on crypto. Okay, to finish up, one of the big questions right now is how will these rate hikes affect the prices in crypto and stocks? Well, Cathie Wood sought counsel from some of her close value investor friends, and this is what they said.
Now, I have spoken to some really good value investors, who've been doing this all their lives, and asked them, if interest rates were to move into the 2 to 3% range, let's say as measured by the long-term treasury yield, which parts of the market, given where we are now, would be hit? And the answer that I found most interesting, and that I think we've just seen in Facebook, is it would be the more mature growth companies that are facing some competition, and not the super growth companies that are just entering into their exponential growth trajectories. So again, another argument for new growth, and the private markets know it, because private market valuations have only gone up over the last year. We're writing a paper gathering the data on this right now, but in the last year, as true disruptive innovation strategies depreciated 50% or more, private market, which is which focuses on disruptive innovation, private market valuations seem to have doubled. There's really something wrong with that picture. And I think the private markets have it more right. There's more innovation taking place today than there ever has been in history.
So after an explosive year for the S&P and crypto, inflation has begun to get out of control. To combat this, the best tool the Fed has in their toolkit is to pull back on cheap borrowing and raise interest rates. Just the threat of these hikes was enough to cause a correction in stocks and a big pullback in crypto. However, Cathie Wood still remains extremely bullish on the crypto market and sees it doing a 30x over the next several years to a market cap of around $50 trillion. And according to her value investor informants, raising interest rates actually impacts big tech a lot more than small tech. So there you are, guys. Hope you enjoyed. So do you think we should be fearing these interest rate hikes, or should we be looking for a place for protection from inflation? Let me know your thoughts below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.